Hey everybody, welcome to Afternoon Market Action. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Glad to have you here. Glad to have both of us here today. My name is Glenn and...
My name is Patrick.
Yeah, he's Patrick. How you doing, Patrick? You doing okay, buddy?
I'm doing good. How are you doing?
Yeah, I'm doing good. This gonna be a good show. Yeah. You need some beard products? We got some beard. You're gonna be a good show. All right, anyway, only some of you going to catch the reference of that. And Patrick and I, of course, are not twins. So we're not twins. All right. By the way, no, I'm not a senile instructor. I'm a senior instructor. Wow. Wow. Did you really just call me a senile instructor? We were just talking about how old I was compared to Patrick. Patrick's a youngin', and Joey just turned 40. That's right, Joey. I just put it out there. Today is Joey's birthday. Everybody, VV Nation, say hello to Joey.
Happy birthday, Joey.
Happy birthday, bro. Happy birthday. 40 years old, man. And Pat, you were just 21 yesterday. All right. So all of you who are brand new to the channel, welcome. Don't forget to hit the subscribe button along with the bell icon so that you'll be alerted to all the new videos that come out, the live streams and the videos. Patrick and I put a lot of videos up. And we also are on Twitter. If you're looking for me on Twitter, it's at Glenn Tompkins Jr. And if you're looking for Patrick on Twitter, it's pfrance88. Got it right this time?
Yep.
All right, pfrance88. Oh, he's not sharing the screen? Wow. Okay. And there you go. Now he can see the screen. All right.
There we go.
Okay, there you go. Remember, go down there, fit the screen. There you go. There you go. So that's what I'm here. I'm here to help out the producer to know what he's doing. All right, so Joey's getting a lot of love today, and as well as he deserves it. If you can hear us, by all means, let us know where you are tuning in from. I don't have Facebook up. Okay. All right, it's coming. So Joey will get me so I can see what's going on Facebook as well. Patrick Red Bull France. I know he drinks a lot of Red Bulls. Today I'm thirsty. I'm drinking Pepsi. None of you judge. Don't be judging. I know I got the sugars. But
What,
today,
because of the earnings yesterday?
I'm drinking some Pepsi. I do it only once in a while. Jay is on Facebook. Hey, Jay. Wendell is on Facebook. He says, happy birthday. Hello, Glenn and Patrick from Riverside, California. Hot Florida. There's John in hot central Florida. Yes, I'm 40 as well. Not, says Rodney. I don't think there's a whole lot of people on here that's 40. I think there's a lot more people above 40 than 40. That's all I got to say about that. John is here from Boston. Charlie is here from Connecticut. Mike is here from Ohio. So thank you all for tuning in. If you like the content today, don't forget to hit the like button. And most of all, if you can, take a moment right now. I think we should have a lot more people in the room than we do. If you can right now, share the link for this live stream on your social circles. Let's get some people in the room because we got a lot of great stuff to talk about today. A lot of hot topics. Patrick and I will both give our insights as to what's going on in the market today. Starting with, what do I do? Okay. Starting with the inflation number came out today. Oof, that wasn't good. The inflation number came out today. Wall Street slips on hot inflation data, rattles investors. So we go down. Stocks slipped on Wednesday after hotter than expected inflation data fanned fears that the Federal Reserve might take a more aggressive stance on interest rate hikes, potentially tipping the economy into recession. So Patrick and I think a little differently in regards to the Fed's role, or if the raising of the interest rates is good or bad for the economy. My stance is it's the Fed's real only tool to help slow down an economy. As an economy grows and it bolsters and it gets hot, inflation is the byproduct of a booming economy. So what is the Fed's job to do to slow it down? Is to raise interest rates. So now, does that help inflation? That's Patrick's question. And again, it was asked on the Hill by, who was it, Elizabeth Warren? Yep. And the Fed honestly said no. But his job for going after inflation, the only tool that they have to go after inflation is the raising of interest rates. to slow down the economy. And if you make things, if you slow down the economy, hopefully that will bring inflation down. Patrick, your 2 cents on that.
I mean, if your only tool to slow down inflation is to put the economy in a recession, I think you need to reevaluate your tools and figure out better options than just forcing a recession.
So what else can they do? I mean, if you're going to put that out there, what else can they do?
I mean, I'm not on the Fed board, so I don't really have, access to all of that to be able to say exactly, but there's definitely things, if they can do quantitative easing to keep markets going higher, they've got enough smarts and enough brain power on their team to be able to figure out something that can help avoid, or slowing down inflation without actually having to put the economy in a recession by, just simply raising interest rates, which they admit doesn't even affect the cause of inflation right now.
So if you do quantitative easing, then we're now printing more money. Yes?
Yeah.
We've already got a deficit that's way out the ballpark. Yes?
Yeah. I mean, I'm not saying it's not, the best idea. I'm not saying it's a good idea. What I'm saying is if they can come up with a way to figure out how to make the markets continue to rise for 10 plus years just off of quantitative easing, they should be able to figure something else out other than just raising interest rates to try to slow things down a little bit.
All right.
That's all I'm saying.
That's the difference in opinions. And it's fine. And I like the differences of opinions. And you guys can, chime in. Sonny says Canada raised a full percent today.
Yep.
When everyone was thinking 0.75%. So,
and somebody also told us during the Jockey Club this morning, there's about a 30% chance now they're betting on that it's a full percentage point raise this coming FOMC meeting.
What did Uncle Glenn said needed to happen at least once during all of these raises, that it was going to probably be a full basis points at least once. If inflation is running, and, it was at 8.1 to 8.6, and now it's at 9.1. Inflation is running. And with that, people are paying a lot more this year than they did last year because of inflation. What else do you do? And it's a tightrope that the Fed is going to have to walk. But at some point in time, they got to be saying in their mind, even with what we're doing and inflation is still running hotter, we're going to have to get more aggressive. And don't get me wrong. I agree with you. I think that a recession is going to happen. Because of this, a recession is going to happen. And if you go back historically, every single recession that we've had was Fed-induced. Well, It was based on monetary policy. All right, it's done on monetary policy. M. Catmull says, I don't know, but I thought a recession was good as a normal course of business cycles. I thought the Fed was trying to minimize the impact. Incorrect thinking? No. The Fed knows, I think, that it's going to be in a recession, but they're trying to make it a soft landing. That's the other term that's floating around out there, is that they're trying to make it a soft landing so that the recession is not a deep-rooted recession. I don't know where I stand as far as, is this going to be a deep-rooted recession or is this going to be a mild recession? I don't know. I think right now a recession is inevitable, but I guess it's how they manage what they do to make it easier or worse. All right. Fed swaps show close to 3 and 4 chance of a 100 basis points hike in July. I think it's needed at least once. And there you go. Brad is right. And I think that Patrick and I can both agree with this, is that the Fed waited too long to react. And then when they do, they overreact. Patrick, I think we can both agree on that. Yes?
I agree. And one of the things as well is, at this stage, before they start putting that full 100 basis point hike in, I think they need to have some sort of a break, at least for a month or so, to give their effects that they've caused from raising rates so much so fast to really, sink in and establish how well they're doing so far, or, where everything is at, because they're going to make the same mistakes they always do.
I
They
think that
raise
that
too
time,
aggressively without letting their work, without seeing the results of their work.
I think that time comes at the time of midterm elections. I think that's when the break happens. That's what I think. I think that they still raise during the summer. And normally it's supposed to be sell in May and go away going into the summer months and then coming back in the September time period. I think a couple of things. I think they could raise throughout the summer or take that break during the summer in preparation for the new session opening up in September. I agree. It takes months for rates to take effect, says CB. Dave B, what's up, Dave? Inflation 9.1 year over year. Inflation started before July 2021. Inflation is greater. I think that the numbers are what the numbers are, and I think inflation is higher than what it's reported as. But keep in mind that the inflation numbers doesn't include food and fuel, which is where the American public is feeling it the most. All right. They were late. They should have started sooner. Those who snooze lose, says Mike. Let's go.
But that's the thing, though, is this is the whole purpose. Is they try to push us into recession. Therefore, oil demand goes down because everybody thinks the recession's coming. Look at what oil's doing right now. Oil's down under $100 a barrel, closer to $95 a barrel.
I still think it should be much higher than that.
But it's down from the 120 highs that they were at just like a month ago. So, I mean, you're starting to see the effects of what they're doing. That's why I'm saying they need to take a break to let everything catch up so they can really truly analyze it to see if they're on par or not before making that decision of how much they need to hike it up next time.
All right. Maria says, I saw this coming in 2016 when they started lowering interest rates at the time, 3.65. I don't know if I saw it that early. I really don't. I think that the whole idea of lowering the interest rates was the easing to get the economy going. And that was prior, Maria, that was prior to COVID in 2020, right? So, and Patrick's right. We've had the market going as a booming market for the last 10 years. So at some point in time, the markets can't go up forever, right? And it's time for it to pull back. I think that it really is that a recession is inevitable. I just want to see if it's going to be a deep, dark, dank recession, or will it be, like a rainbows and unicorns recession? So rainbows and unicorns compared to a deep, dark, dank recession. Friday recession. Yeah. Big truck. I don't know where that came from.
We'll find out soon enough, right? In July?
Yeah. Yep. You will. You will see. Glenn, they did stop the over asking bids for homes. Home sales are slowing and over asking is over. I'm going to talk about homes today.
I saw an article, but I had a feeling you already had that covered. I see the article in there. Cool.
Look at that. Bacon prices fell 1.9%. Its second monthly decline. Woo! Go bacon. Go bacon, baby. Go bacon. If you follow me on Facebook, of which I don't give that information out unless you find me, but I post a lot of stories about bacon because I love bacon. All right. And actually, Ayad, I'm not going down that path. I'm not going to go down that path. You know me, I don't like to do the politics in the room if I can help it. Glenn, is this going to cause real estate recession? I think that that's already happening. We'll talk a little bit about that today. Glenn saw it when we had to pay $10 for bacon. Man, I'm not paying $10. I did. I went and bought some bacon. It was $10 a freaking pound. But as much as I love bacon,
what kind of bacon did you buy?
I bought it from Food Kitty.
From what?
From Food Lion. I bought it from Food Lion. I didn't even go to Publix or anything, or I didn't go to the Harris Teeter. I went to Food Lion, and bacon was like $10 a freaking pound.
Dude, it's time you start checking out Lowe's sausage and their breakfast sausage stuff, because that is on point, man.
I've never been inside a Lowe's food market. I've never stepped foot inside one.
You're missing out.
All right, maybe I got to. All right, let's go to the next story. Big story, and I put out a video on it yesterday. Shares of EV maker Canoo, ticker symbol GOEV. surge after Walmart agrees to buy 4,500 electric delivery vans. The story that I did on the 6 p.m. video was one of the things that I stated. I'm not trying to change anybody's minds when it comes down to EVs, but EVs are still hot in the news. EVs are still hot in the news. And I did go after some of the things that people are against EVs for. I talked about the electric grid. I talked a little bit about the batteries. I talked a little bit about the price of the cars. And there's no getting around it, no matter how you feel, no matter if you think that in the background we were pushed towards this because of the new clean deal, blah, 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 blah. The whole idea is that these are stocks to keep your eyes on because they have the potential to rise because of the demand of electric vehicles. And here's another company. GM was a company that did so. Amazon did it as well. More and more companies are going after the EV makers to help them in their EV, on their EV side of the business. So I'm just, somebody says time to grow your own bacon. That means I got to raise pigs? Oh, heck no. I'm not doing that.
Not that hard, man.
Okay, then I'll come to your house. I'll pay you top dollar for bacon if you grow the pigs and do all that stuff. I
don't know if you're going to be able to handle the inflation.
Oh, wow. Whatever. I don't know what that means, Roger. I'm not going to say that. Something tells me that that's bad. Glenn, would it not help to restart local U.S. oil production to get lower gas prices for all the poor middle class? Absolutely. I've said that on more than one occasion. We are an oil-rich country. We got oil, and it makes sense to drill our own oil. The administration won't let it happen, blah, 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 blah. I think it's ludicrous, all right? I think it's ludicrous for us to go to other countries to ask for them to produce oil or to refine it in a much dirtier manner than it is for us to go after our own oil that we have here that we are not, it's not advantageous for the companies to go after. All right. So we need to increase refining. People are willing, companies are out there saying they're willing to do it. They're willing to put more refineries on. Go ahead, finish that. Go ahead.
If the government is willing to up their subsidies for it.
Absolutely. Absolutely. So there's people willing to putting more refineries online. It's just not advantageous, excuse them, for them to do it. So it is. And because of the rising gas prices, even though they're pulling back, and I think that that's short term. I honestly think that the oil prices dipping below $100 is short term. The story hasn't changed. There's still limited supply and high demand. And what that normally calls for is higher prices. That's just economics 101. Would you agree with that, Patrick?
Economy studying 101, folks.
Economy studying here on VectorVest. It's $1,000 an hour worth of credit for these classes that we're teaching, right? $1,000. I get 900, Patrick gets 100.
Oh, I don't like this deal anymore.
That's economics 102. That's my economics. That's my economics in there. All right.
We're not going to get into that right now.
All right. So with that, I'm going to be talking about more EV companies for you guys to look at. I gave some yesterday in my EV story. I'm going to give some more today. A story that Patrick's got, Oh, what just happened? Oh my gosh. Okay. Go ahead. Iveco, is that Iveco to leave Russia to transfer stake in truck JV to local partner? Talk about it.
So yeah, basically this company, they work with primarily, you were talking about battery powered vehicles. These are hydrogen vehicles. And they have made a partnership with Hyundai basically, where they're going to now start, sharing technology and help working on the technology together. To bring Hyundai's hydrogen buses across, I think the US, if I'm not mistaken, or across Europe, excuse me. So while there's not really a trade opportunity And these two stocks, I looked up the IVCO. It's a foreign investment on the U.S. market. It's over the counter. Doesn't really have any volume. And I don't think, because Hyundai isn't a U.S. company, I don't think you can buy Hyundai on the U.S.
It's
market.
Hyundai.
Huh?
It's Hyundai.
Whatever.
Okay.
I still imagine those little cars that, the hubcaps were always off of, driving down the roads back and forth.
That was way back in the beginning. Yes.
And that anytime I see even a new one, that's what I think of. So, but yeah, they've teamed up with them to help start working on their hydrogen fuel cell and hydrogen powered bus. And that should be starting, I believe it says 2023, early 2023, somewhere in here. I have to go back and find it.
Here it is.
Yep, there we go. From starting from 2023. Its plant's going to be in Italy, so it's going to be producing them for all of the EU area. But yeah, this is, another topic talking about clean energy. We've been talking about it over the last month or so, the battle between electric vehicles and hydrogen vehicles. And this just kind of shows the other side of it. While Glenn brought the electric vehicle side of things from Walmart, this is looking at the hydrogen vehicles going to be powering Europe. So while obviously Walmart US companies are going to have a little bit stronger of a marketplace, it still shows the adoption of that hydrogen technology that we've been talking about. So interesting to see. Once again, clean energy just in general is a good place to keep an eye on. But it's that tug of war going on, trying to compete for the biggest headlines, trying to get your name out there. So I think that's what we're still seeing right now.
Nick on Facebook says, I'm seeing a banner ad on CNBC for McDonald's, $1.79 any size drinks. In Canada, it's CAD, what is that? CAD1 for any size drinks, and their app is US 78 cents. Man, everybody's trying to pull whatever they can to get people to buy stuff right now. You know what I saw? I saw that prices are going up on stuff, but we're getting a little bit less.
Oh, they started doing that a while ago.
Which is that should be
illegal. Companies already announced that, like toilet paper, everything, they're giving less in it, and you're paying more for it.
You mean I'm not getting 1,000 sheets anymore?
No.
That's crazy. I'm gonna start counting every single
one.
They
started doing that like almost 6 months, almost a year ago. They announced that they were going to do that, try to help combat inflation when we first started seeing signs of it. And then inflation continued, so now we're just getting smaller products, and they're still charging us more. So
that sounds crazy. It sounds ludicrous.
Ludicrous
speed. All right.
That's marketing in its finest right there, folks.
There you go. All right. Someone asked about the home buyers. And here's the story. Home buyers are canceling deals at the highest rate since the start of the pandemic. So now, with interest rates going up, mortgage rates going up, people who are in deals to buy homes are now backing out. Americans are canceling deals to buy homes at the highest rate since the start of the COVID pandemic. The share of sales agreements on existing homes canceled in June was under 15% of all homes that went under contract. Home builders are also seeing higher cancellation rates as well. It would suck for me to be a home builder, and they said, and somebody came to me and Joey said, yeah, Glenn, I want you to build me a house. I got you, Joey. I'm going to build you a house. I get halfway through the house, and Joey says, no, I don't want the house no more.
Hey, now, but at least you get the due diligence and all that.
Well, and actually, didn't I get some money from Joey to at least start to build a house that I don't have to give back?
Yeah, that's the due diligence.
All right, so now I'm building a house that I still got to sell to somebody. And now I got to probably sell it at a lower price than what Joey was offering me. And that becomes poopy.
So I have a personal story for this. On Sunday, we went after church to go check out this house that Katie's been keeping an eye on. She sent it to me a few weeks ago, but it turns out the day that she sent it to me, the deal was already, or the deals had to be in by 5 o'clock that day, so we didn't even get to go look. Apparently, they had they had the inspection come through, and then the buyers got cold feet and then backed out of the deal. And so we went and saw it on Sunday. The house still hasn't sold as far as I'm aware of. But it turns out what they were doing is the price was in a really good spot for the neighborhood. And And what they didn't tell you is they had solar panels that still had the vast majority of the loan still on them. So when
Ooh,
you bought the house, you
you
bought it
you
at
were
one price,
buying
but then you
that
had to take over the
loan.
loan for the solar panels.
Okay.
And so that would have been putting the price of the house back around the normal range of what you were expecting to see. And yeah, I mean, it's crazy. I've seen on just our neighborhood, people are more skeptical about buying, and you're seeing for sale signs actually staying out for more than just a couple of days. Before they sometimes wouldn't even hassle putting a for sale sign in a house because around our area, they're already out off the market the day they go on the market. So now you're actually seeing for sale signs for a week, 2 weeks now all of a sudden. So yeah, it's definitely impacting the housing markets. Will it cause like a 2007, 2008 kind of situation? I don't see that happening. I see prices definitely cooling off on houses, housing pulling back, but then I see us going stagnant for a long time, as everything else tries to recover back up to that.
So my wife and I are looking at both houses in Mooresville,
Mm-hmm.
but we're also planning for the future because one of the things that we would like to do, because we love Tennessee as much as we do, is we're looking to buy a house that could be both a house and a bed and breakfast. So she's been looking at a lot of 4 or 5 bedroom houses close to Gatlinburg, and she's watching the prices fall. And she's like, baby, even if we not living there right now, we need to get in on some of these houses that are out there that have gone from like 500,000 down to 3.25. That's a big drop in a house, especially for the purposes of if we buy now and we just chill and we just, throw money in making it more so for a bed and breakfast. Even though we live in Mooresville, it's planning for retirement from that perspective. Glenn's
Have you
bed
ever
and
been to
breakfast.
Gatlinburg?
Glenn, yeah, we love Gatlinburg.
You do?
You love it, love
All
it.
right.
We've been
Just
there.
curious.
We try to go there at least twice a year. I get a Tennessee fix. I got to get my Tennessee fix. I love it. I love just it. And so we're thinking about trying to get a bed and breakfast in that area, and this may be the time. And you're right that if it stays stagnant, Dave says wait for the bottom. Would buy a stock that's falling, right? You wouldn't buy a stock that's. I hear you, but we're watching the prices fall, and I think that this is a tough industry right now. So I got some stocks that I'm kind of bearish on in my list today from the home buyer's perspective. All right.
I think that's going to help out with the whole unemployment numbers, though. You're going to have a lot of ex retail or real estate agents that are going to be looking for new jobs soon.
Yeah, they can come work in my bed and breakfast as long as they know.
Dude, it feels like everybody around here is at least a realtor or as a side hustle as a realtor, and it just seems oversaturated.
I don't disagree, and that's why I'm bearish on that.
Yeah.
All right, your next story, click on it. You got the control. Next story is yours.
Alrighty.
You were just on it. Okay.
Huh?
Yeah, but it won't open up the full story for me because I'm an idiot.
Oh, man.
I know. It's not my fault.
You didn't even use the tools. Did you
I
even
never
download the tools,
used that tool. I don't know how to do it.
Oh, you boomer. You don't even have your caretaker can't even show you how to use it.
And he doesn't even know what it's all about.
All right. So basically it was just looking at 7 beaten down value stocks. I had 2 of them. Glenn wanted to take one of them as always. So I gave it to him.
Oh, I already had it before you.
And so
I had it before you did. You're not over talking me on this either. No, I had the stock. I'm not trying to hear that. And you're not getting away with that. I already had the stock yesterday.
All right, pick stealer. It's okay. It's okay.
I had it yesterday.
Calm down. So yeah, I generously gave Glenn one of my picks so that way he could have better looking picks today. But I still kept one of them. So we're going to be taking a look at this. There's 7 stocks. Unfortunately, we can't show them all, but Meta, Micron, Capital One, a few other ones. Let me just go ahead over here real fast. A few other ones were in energy. I didn't think they looked as good as some of the others. Realistically, Meta and Micron were by far the 2 best, from my opinion, from that list. So we're going to take a look at the 2 best. Glenn will have one of the 2 best, and I'll have the second one. So we're going to be looking at those in a little bit. And then Any others that I had on here?
Those were the two that you had, bro.
Okay.
You can click on that because that goes into my next story.
Ah.
This is the reason why I had MU yesterday, bro. It was already
Yeah.
in this story.
You're lucky I'm generous.
No, whatever. I already had this yesterday. All right. But Wall
You're
Street
lucky I'm
rethinks semiconductor stocks ahead of earnings. I just put out a story last week on semiconductor stocks. I'm still bullish on them right now. I gave some information on why. Building is coming into Texas for semiconductors production back in the U.S. Money, there's a bill out there for semiconductors that it's already law. It's not even a bill. It's already law. The money, for some reason, is just not getting out there. Move your mouse, Patrick. The money is just not getting out to the people. There you go. Not getting out to the people for the bringing back of production of semiconductors, because we went from 19 something or other.
PPP round or PPP loans round 2, basically.
Say again?
PPP loans round 2, basically, with this, where they have all the money, but it's not actually getting to what it's supposed to be.
It is sort of kind of like that. The money is out there, but it's not getting out to the people, which kind of sucks. So Texas is like, yo, we're going to do what we got to do. Global Tech is moving to Texas to start to build on that whole idea of bringing more semiconductors. There was a point in time where we had 37% of the global share of semiconductors. We now only have 12 because we've given it all to China. All right. So does Glenn know you looked at AMC this morning? Oh, no, I didn't look at it. I didn't know. All right. Did you buy it?
No.
I know you're not an AMC guy. You're a GME guy. I'm the AMC guy. But a lot of stocks that are in here, I only picked a few from this list that I thought were more of the idea that should continue to go up right now. But then there's other sides of this. TSM, Asian chip maker shares rally as sector appears to bottom. So now there's a story saying that TSM, Taiwan Semi, might be looking at a bottom in that space. My kid now works for ASML, which is connected or direct hand in hand with TSM. And I'm glad to say he's going over to Taiwan in a month or so for a few months to get more acclimated to the culture for Taiwan Semi. So he's making a lot of money as a young kid in this whole chip making space. And then there's another story. NVIDIA stock price cuts are piling up. Wall Street is getting worried. But from this perspective, the vast majority of analysts tracking the chip maker continue to rate it as a buy or overweight, even as shares slide. So it's, Wall Street is still bullish on the chips as well. I still think that everything needs chips. There's no ifs, ands, or buts about them. It just is a matter of where we're going to get them from. And even if we start building factories here in the United States to bring some of the manufacturing back to the United States, it's going to take years. All right, this is not something that's going to help overnight. You're going to say, hey, we're going to give out all of this money and it's just going to happen overnight. It's going to take years, 5, even 10 years for that to start picking up the whole production in the U.S. Mark Norton, thank goodness, no, I've tried forgetting about that nightmare. Oh, man. Did you buy GME? Or
you actually read that? You really are Ron Burgundy, man.
Listen, I read it. Listen, you know something?
Read anything that you see.
Hold on. I'm putting AMC on my list. I'm going to put AMC. I wasn't going to do it. I'm putting AMC on my list. I did the Tuesday video looking at both GME and AMC. From an AMC perspective, I think that, the whole idea of why the big money was going after AMC is because nobody was going to the movies. And the movies, and during 2020, during COVID, they got smoked because nobody was going to the movies. Now, they redid the movie theaters. They made them more comfortable. Blockbuster movies are coming out, headed up by Maverick, of a movie which I saw, which was a great movie, especially if you're a Top Gun fan. It's out there. So, I'm not trading either one right now. I still think that they got a lot of upside potential. All I need to know is from the GME standpoint, is the NFT market going to be what's going to help them to pivot as what's going on with that stock. AMC.
And we'll talk about that.
We will, and I'm not a fanatic on either one of them, because that's not my job. My job is to talk about what can help you to make money. I've been in AMC and I've been in GME and I've lost a lot of money. So because of that, in and of itself, I'm not playing those. I can time them. I still think that they both have potential. But I'm going to time those trades. I'm not going to sit. I teach people beyond that, not to hold a stock while it's falling in anticipation of it going back up. That's core principles of what we teach here at VectorVest. So, something, been here 18 years. I've been here 18 years, and sometimes you got to eat your own cooking. And, I'm not watching my portfolio go down in price in anticipation of a stock. I still think it's got potential, but I'll time the trade. That's my 2 cents in regards to that. And then the other big story is Twitter. And Twitter's getting out. Musk is getting out of it. I think that this is a ploy for him to go still buy Twitter, but at a lower price. All right, there's no ifs, ands, or buts about it. Glenn, if you lost on AMC and GME, you have to be like George Costanza and do the opposite next time. Yeah, I'm going to wait. I'm just going to wait. Scott says, I like your philosophy, Glenn. That ain't my philosophy. It's the VectorVest philosophy. It's things that I got taught by Dr. DeLito and things that I've gotten taught by just using the VectorVest software and just years of investing. All right. Twitter's biggest accusations against Musk and its lawsuit. Twitter on Tuesday filed a suit against Elon Musk to seek to hold the billionaire to his $44 billion deal to buy the company. And Musk was like, y'all not giving me all the information I need to know on the bots. And then, blah, 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 blah. So he backed up, and we'll see how this plays out in court. And, Twitter's got a lot of money. Musk has got a lot of money. And you know who's going to make out on these? The lawyers. The lawyers are going to make a lot of money on this, more so than the public. And so we'll see which is going to happen. What's going to happen with that. All right.
I'm still a believer that Musk is doing this just so he had a reasoning to sell all those shares at the top.
You think so?
Oh yeah, I still think that's the reason. And he had no real intentions of buying Twitter. That's why he probably had something in the contracts where he can get out, whether it be this bot thing or whatever. But I mean, that's his excuse, to lock in billions of dollars. Because I mean, he would have been taking a 50% cut if he sold it now.
Yeah, he would. Yeah, he would. All right. So those are the stories behind the stocks today. I think I'm just going to minimize this, and we can see our list. We're going to come back to the customer picks. Market news, we already talked about the stocks in the market for today. I'm going to take that out. Fastest moving sectors, let's do that. I'm going to go to Unisearch. Let's go see what's moving. And I've got a search, and I'm going to do it on industries, though. Let's go see what industries are moving today. With the market being what it is, what are we we got a mixed market today. The Dow is down, but all the other major indices are up, not by a lot. Our advanced decliners, we still see a tad bit more stocks going up compared to going down. 3 yellow lights in our color guard tonight. Patrick does not, you don't have the color guard tonight. You have it
not
next
tonight.
week, you have it Friday.
I'll be back on Friday.
You'll be back on Friday. All right, but if you're looking at our color guard, what is this telling us is our traffic light into the market to be cautious. A lot more yellow than anything. A lot more yellow than anything. All right,
we started with 3 red lights, so seeing 3 yellow lights right now is definitely a huge improvement.
Yeah, I don't disagree with. There we go. Going back in time, but a lot of yellow. Primary wave is bouncing back and forth between up and down. The market's just showing its signs of volatility right now. Let's go to the Unisearch tool. I'm going to run a search. And what I'm looking for is industries that have made money over the last 20 days, but I'm going to look to see down the list what industries are increasing the most over the last 10 days. And there it is. Look at that. Building wood products only up 0.4% 20 days ago, but in the last 10 days up 8%. Looking another building, look at that. Building again. Building painting products was only up 1.25% in last 20 days, but now up 6.32%. What else is moving that way? And that's now software healthcare is taking a hit. That's an industry to stay away from. Software healthcare. Look at that. Was up 15% 20 days ago. Now only up 3.27%. Folks, this kind of analysis you can have at your fingertips. Biotech was just hot like last week. 20 days ago, it was by price up 21%. Now only up 7.28%. So
Whoa,
I
whoa,
love,
whoa.
huh?
Hold on. I think you're misinterpreting that. You're looking at the ETF sector's biotech, so therefore you're going to have leverage with that. So including double and triple leveraged ETFs that are probably popping up in there. So that's going to
those are ETFs. You're right. You're right.
Yeah, that's going to inflate that move significantly there.
Yep. I didn't realize that it was ETFs. But you're right. But you know something? It's still the number one ranking industry right now out of 240 some odd industries. Kind of interesting. But for the purposes of finding out what's really moving right now in today's market, looks like building wood products. What else? Building paint products. All right. And these are industries number 49 and industry number 52. But look at the big moves over the last 10 days. Something for us to start to look into. All right. As a matter of fact, let's do this. Being that a lot of you are not VectorVest subscribers, I'm only going to look at the top 5 stocks. This has got only 5 stocks. It's only got 5 stocks in here. But what's moving? UFPI up 1.5%. West Fraser up over 1%. And Louisiana Pack up 0.6%. All of these over $50. But in an industry that's moving over the last 10 days higher than it did over the last 20 days, at least those are some stocks for you guys to keep your eyes on.
Just be a little careful. It's not a relief rally.
And actually, market timing is still the overall factor. If we go look at our VectorVest composite, put it over the last nice move today. Look at that. That's over the last day, trading near session highs today. But put this on a 3-month graph. Yeah, and I've done another video that talked about are we at a bottom? I said that we're going to have several bottoms. But right now, here was an upward move. Boom. Failed. Here was an upward move. Boom. Failed. And right now, if you look at what's going on right now, we're in a little bit of a sideways move on the VectorVest composite. We're in a little bit of a channel. And from a technical perspective, using moving averages, the 3 is currently below the 8, even with an update coming off this level of support on the composite, sitting at about 52.10. And that's why all that yellow shows in the color guard. We're in a little bit of a channel right now. So
we're in more of a wedge than anything else. Broke down below the wedge as of today, but seem to be climbing back towards it.
We went below the wedge. If I want to look at it from that perspective, yeah, we are. And there's the overall. So we got a bit of a wedge. I ain't gonna lie. We do have a little bit of that's extended. No, it's not. That's a little bit of a wedge going on, but we're outside of the wedge to the downside. You know, if you want to look at it from that perspective.
If you line it up, we're actually right at the lower part of the wedge with the recovery that we've had so far today.
Well, no, because
bring that up. I don't know if that's... Bring that up to the last little dip. You can't predict today, so you don't include today. Yeah, bring it down a little bit. There you go. To the low of that middle candle that you're in the middle of where you're at. There you go. There? Yeah.
All right, but what I'm still looking at from this perspective is that the 3 is still below the 8.
Yeah, but we broke down below the consolidation. Now we're starting to come back up, though.
Well, we'll see if the biggest confirmation of moving up would be the 3 going back above the 8 from a quicker standpoint. Can you that downtrend line down? Can you move that downtrend down low? I already just did. I just did that in energy. Patrick made me do that. All right. So from that perspective, overall, what's going on in the market? Let's go back to the viewers tab. At least we looked at something from a building perspective that shows me that it's on the rise. That may not be a bad play. Just keep that in mind. Customer picks. All right, you guys, we put out on the community, and you guys gave us 6 stocks I could find. There was 2 of them I could not find. One of yours, energy, I could not find. But here's the 6 stocks. I'm going to take 3 of them. San Juan Basin, Zim, and Neo. All right, so these are stocks that you guys put in for us to look in. After today's live stream, we're going to put it up again for next week in the community tab. You'll find it. As long as you're a subscriber to the VectorVest channel, you'll see a lot of the posts that we put up. And I'm going to ask for stocks to look at for next week. So we found 6 stocks. San Juan Basin, I'm a fan of, nicely moving up today. Zim, that's a big stock that paid a big dividend in the shipping space. I do like that it's undervalued, good upside potential. Growth, 43% as far as earnings growth. Both of these are more aggressive plays because relative safety are below the value of one. But Zim, wow, should outperform a AAA corporate bond almost by 2%. Almost by 98%. That's huge. San Juan Basin should outperform a AAA corporate bond by 81%. NEO, on the other hand, is still more of a speculative play in that clean energy space. Not one of my best stocks I like in the space because relative value, relative safety are both below one. Companies not making money. Both Zim and San Juan are making money. One, of course, is in the energy space. One is in the shipping space. And one is in the clean energy space. The bad thing I don't like, I did get the last dividend on it, but I had to take a 25% tax cut on it because that sucks. That was 25% of my dividend that I got. I had to give to Israel, So I don't know how that rubbed everybody else. I didn't like it. It was still a good dividend. Don't get me wrong.
You
but
realize all cash dividends are taxed, right?
25% was huge. That was a lot more than what most people pay on.
I think standard is 15, but maybe because of something specific with it.
Well, it's an Israeli stock.
Ah.
So I'm thinking that is it. I am a fan of San Juan Basin. I'm probably going to look to get back into it again. Just we need to wait for oil to start going back up again. And NEO is the worst in my list in that $21 price with a value of $2.82, way overvalued. But where San Juan Basin and Zim are both undervalued. NEO, NEO could be moving because of news, and that's fine. But long-term, I'm not feeling it. Upside potential is not there. The safety is not there. The company's not making money. Even though they're growing their earnings at a clip of 18% a year, they ain't making money. I'm going to take a look at these 3 stocks on a graph, put these on a 3-month graph. San Juan Basin, after oil got hit, look at that. Got hit, but look at the rebound. I'm not going to quite call that. It's not a classic hammer, but I like the bounce. I like the 3-8 cross. Traveling right now at a level of resistance of 1031. I'd probably put in an order right now. Probably good to open at about 5 cents higher than high, about 1036, and I'm probably going to do that. I'm letting you know I'm probably going to do that. I like the earnings per share. I'm probably going to put in a buy stop order at 1036 to make sure that I'm moving higher. I do have a high here of 14. I got some money to make on this. I'd like to see RT go back above 1, but it took a big hit when oil hit. But when it was rocking and rolling, I made some money here, and I'm thinking another opportunity maybe right here. Again, I'm thinking about a buy stop order 5 cents higher than the high. Looking at Zim could be setting up. Look at that. The 3 and the 8 are crossing today. Earnings is higher than it was 3 months ago, but it's pulling back over this time period. Where was the dividend? The dividend paid, and the dividend, and since then the earnings per share has fallen. There was the dividend paid on 6/8. X date is probably coming up again, but I do like the 3/8 crossing on it right now. Could be a buy opportunity, at least if you want to be the owner of record by the X dividend date. So I do like it from that perspective. And then
Glenn,
the last,
I thought Zim was a one-time dividend, a special dividend for one time.
but they still pay a dividend. Hold on.
But I thought the big
that
one,
was a
like
special
everybody was
dividend.
jumping on board with, was a one-time deal.
That was a special dividend. Dividend paid. Let's go take a look at it.
That's still showing the $19 or $20 or whatever it was from that special dividend.
That. I'd have to look at that. I think that was a one-time dealie. Put this on a 1-year graph. The dividend is growing on it, though. Even if that was one-time dividend, look at that. Dividend is growing each time, which makes it more attractive to buy as well. But a lot of choppyosity going on. I do like the setup with the 3 crossing the 8 today. All right, this may not be a bad play. I'm wondering, does it give me the prices? It does not. I wish it did. I wish that it would give me the dividend paid. There's the ex-dividend date. All right. But those are the 3. Up. I got one more, don't I? And I do. I got Neo. Neo is moving up, moving sideways. I still think that this is more so news-driven in a space that's moving up overall. Earnings per share is a little bit higher than it was 3 months ago. But fundamentally, the stock is not fundamentally sound. So short term, if there's some news running with it, the stock, you can trade it off the 3 and the 8s. Not something that I would want to hold longer term. Whereas Zim, I like the relative value on it. San Juan, I like the relative value on it. Longer term, these have good upside potential. All right, go talk about your 3.
Sure. So 2 of mine come from energy. One is, your standard refiner producer looking or exploration with BIREF. It is a pink sheet, so as always, keep that in mind. It is a lower dollar stock. However, it is undervalued. Good long-term potential. The RS is slightly below 1, but as long as it continues the increase that it's been, that it's experienced over the last couple of years, that could definitely get back above that level of 1. One of the big things with all 3 of these that really stands out is looking at their growth rate, their forecasted earnings growth rate shown as a % per year over the next 1 to 3 years. BIREF has a forecasted annualized growth rate of 41% a year. VTNR has a 36% forecasted growth rate, and then Cleveland Cliffs with a forecasted growth rate of 40%. So all of these are strong growth stocks. So with growth stocks, obviously, your risk factor typically is going to be lower, as we can see here. Looking at the long-term potential of the stocks, all 3 of them do have good long-term potential. So all 3 of these are more aggressive plays. The BIREF, obviously, just as Glenn was talking about with SJT, oil on a longer-term basis, oil and natural gas on a longer-term basis definitely has a bullish case for it. On a short-term basis, I think we're still not quite out of the woods yet. So this would be one I'd keep on our radar and wait, for some signs of a reversal to come in before jumping on board with it. This VTNR, while it is an energy stock, it's a little bit different. They focus on trying to, really recycle oil and gas rather than and clean up, oil and gas waste and spills and out in the streams and water all around the world or all around certain areas. So this seems a little bit more speculative to me. I guess you would classify it closer, in my opinion, towards clean energy, which obviously would definitely be a huge benefit for them. But the fact that they do try to recycle used oil, motor oil especially, that does tie them back towards the traditional oil and gas energy field. So they're kind of a unique company that does have a lot of potential, but you want to see that growth continue. You also want to see the earnings per share steadily rising as well. And then Cleveland Cliff, obviously looking at aluminum or metal or steel. And, this had its heyday, but if the housing market slows down, new housing slows down, we've already been talking about that earlier, Cleveland Cliff could definitely see a big sell-off in the near term, or a continued sell-off in the near term and midterm at least. Until the housing market starts cooling back down and until this housing market starts really leveling off and you start seeing homes and real estate in general start to grow again, I think we're going to have a rough time for Cleveland Cliffs currently. That could all be wrong. Maybe, the recession doesn't happen. Everybody starts going and buying houses again. The Fed drops interest rates down to 0 again. And then that would change the whole dynamics. But for now, with the current environment that we're in, the slowdowns, the forced slowdowns that we're seeing, I don't think, being in a steel industry or steel sector is that great of a place to be in this current environment. Looking at them though, they all 3 are undervalued, so that's definitely a positive. But once again, none of them have short-term uptrends right now. They're all in really strong declines. and they all have a little bit more risk than the average stock out there. Uh, BIREF has a higher CI, but that's been declining as of late. But the CI on VTNR and Cliff has been, abysmal recently. So, yeah, while these are three good stocks and all have their certain unique situations that could really see them thrive, I don't think we're there quite yet to see opportunities in these.
Someone was asking about dividends on this. Briarcliff is the only one that pays a dividend, and it's got a dividend safety of 71 on a scale between 0 and 99. So Briarcliff does pay a dividend.
Look at the dividend growth, though.
I saw the dividend growth, but the dividend safety is up. They ain't grown, and what's the dividend? The dividend is 3 cents.
And the YSG is below that level of 1 as well.
Yeah. What's the earning? What's the dividend yield? 49. What's the earnings yield? They can more than pay for the dividend. That's very interesting. The YSG is below 1, and that's the dividend growth is negative, but the yield, the safety is really, really good. They can afford to pay for the dividend. I'm not sure why it's that catches my attention. I don't know why the dividend growth is negative when they can far surpass supplying that dividend without a problem. Interesting. And it's from a dividends perspective, that's Patrick's only stock that pays a dividend, whereas the Zim and SJT have dividend safeties below 50. Even on Zim, I'd be careful from a dividends perspective. I'm very curious about that on Briarcliff.
All right, so let's go take a look at the graph real fast. So keeping with the same look that you've had, we'll go 6 month.
I think you have a layout if you want to use it.
You tell me this every single week and we still don't ever set it up.
Sigh. Okay.
But yeah, here's the sell-off. Dividend, I'm going to take that off. Earnings per share moving in the wrong direction over the last 6 months with Cliff. No surprise there. With the potential of a recession looming, I think that's going to see the slowdown. You're going to see less usage for it, and you're going to see, a cooling off with a lot of these resource companies that we've seen do extremely well over the last couple of years. Looking at the MACD, we'll add that on here. There we go. Oh, come on.
Yeah.
MACD doesn't really show any signs of life coming in. So while the 3 and the 8 that you have here?
Yeah.
Okay. 3 and the 8 look like they're getting ready to potentially cross over. We don't have that crossover quite yet. MACD did cross over, so you may see a slight relief coming in. But with the overall downtrend, I'd wait to see a little bit more confirmation or something, even on a short-term basis, to take that amount of risk to jump on board with it. I need to see more than just a slight little uptick before we start doing that, or before we start getting into it. So this one, I'd be a little careful with. Wait for a true reversal sign to start showing itself. Looking at the next one, VTNR. This one, the 3 and the 8 are still negative. MACD is still negative and moving lower. No real signs of a reversal. Earnings are steadily rising. But once again, out of the petroleum, right now is not the time to be long in petroleum or energy in general. So while it's a good one to keep on your radar, not the right time for an entry. And then last but not least, BIREF. Looks like Glenn may have had a little bit too much fun with this one with the drawing tools here. But so now I know who the drawing expert is in the Jockey Club. This makes a lot of sense, Glenn.
But look at this. There was the pennant. Here was the flag. And look at the stock's price went up. It did do what it was supposed to do based upon when I looked at it. It went up.
Do you ever watch Sunny or Always Sunny?
No.
Oh, man, never mind then. You're not going to get the reference.
Okay.
But yeah, you do have some support here showing where we're holding that support right now. But once again, MACD is still negative, lower overall. 3 and the 8 are still down. Earnings are rising, but right now is not the time to be long in it. Wait for confirmation, especially with the sell-off that we've seen. With the talk of all the recession possibly happening and slowing down everything, wait, be patient. Patience pays, and I think being patient, waiting for confirmation of a reversal or a move to higher is definitely going to be in your benefit here. So, just my analysis of these three so far.
I want to answer a question. Someone said in regards to, I'm saying Neo looks like Tesla did years ago. I don't think it's the same thing. Does Neo have an Elon Musk? I still,
They do.
What's his name?
Elon Musk.
Shut up. Wow, did you really just do that?
No, it really is. It's something. There's a guy that's like looks identical to him. I've seen him on the internet.
On Neo?
And he looks almost identical to Elon Musk and has like all this plastic surgery and stuff. And he's changed his name to be like the Chinese version. It basically sounds like Elon Musk, but it's similar to it.
We're gonna look at Neo CEO. He doesn't look like Elon Musk.
Well, no, there's a recent picture going around the internet where he's dressed up looking like Elon Musk.
Wow. Did you just really say Elon Musk? Wow. That is so messed up. That's funny though. All right. I don't think that they're the same company. And you know something, on another side, Tesla's putting cars out. Is Neo out there putting the cars out? Are they meeting their expectations? That's where the rubber meets the road. I think there's still two different companies. I still think right now that they are a speculative play. They don't have the upside. They don't have the safety. They're not making money. Tesla's making money. Tesla's making money. Let's go put Tesla on real quick. And where's Tesla? They're making money and growing it by 51% a year.
Man, carbon credits are looking spicy right now.
I'm not feeling Neo. I'm not feeling Neo, just not quite yet. All right. Toodles. Somebody said toodles to you. Who said toodles to you?
See you, Mark.
That was Mark saying toodles. See you, Mark. All right. Let's go to my picks from last week. Here was my picks from last week. I was on the drug kick. Oh, drugs are going to get their butts kicked. Tesla was in here last week. Costco, Kellogg. Drug stocks are probably going to get smoked. Let's go back a week ago to the 6th. Sigh, I'm about sad. Quick test them all. Hey, I made money. Look at that, big winner. One of my drug stocks. Oh, somebody sent me, it was either on Twitter or someone said they made a lot of money on ALDX. Look at that, 25%. The stocks that I had in drug stocks were phase 3 stocks that I wanted you to keep your eyes on. These were phase 3 catalysts. Look at that, ALDX. From a phase 3 perspective must have hit 25% in a week. Gotta love that, right? Tesla.
That showed up in Jockey Club this morning too.
Did it?
Yeah.
So it's in a list of stocks that I have. In here. Where is it? Glenn. Where is it? Phase 3 stocks. I'm using this for the ALDX is in there. Here's all those stocks that I have that were on phase 3. Let's go quick test. These were all from last week. Thank you, Mark. Holy smokes. Take Joey out for a drink or 7. All right. What other stocks are in here? How about ADIL was in my list? 38% from last week. ALDX, 25%. APLT, 14%. Some stocks did. I was personally in this stock and I got my ass handed to me. As you can see, out of all of these stocks that I could pick, thank you, Mark. Out of all of these stocks that I could pick, I went and picked the worst one. Good gravy. But there was some good picks in here, and there's a website called Biopharma Catalyst. Steve Chappell let me know about that a long time ago, and I signed up, paid $300 and some odd freaking dollars for this service so that I could get a lot of these phase 3 stocks coming up, and I'm keeping them in a watch list. All right, but I'm primarily using these on midday market and trending Thursday, but I had that stock. Look at that. ALDX, and Patrick said it also showed up in the Jockey Club this morning. All right. Here's my picks for this week. So we made some money on a couple of picks. Here's my picks for this week. Let's stream this. And I'm on the semiconductor kick right now. So there's Micron, AMD, and TSM. Notice that by VST, that all four of these stocks are the top in my list. All right, the four top. I'm going with SQQQ. I think the market's got some downside, especially going with the increase in inflation. On the home side, these are going to be bearish. Zillow, Remax, Open Door, and Redfin. I think that all of these companies are going to be affected adversely if people are backing out of home deals. And on the bullish side, Canoe, Goev, because of the deal with Walmart. These are my stock picks from my stories today. Let's go look at them real quick. View the stock graph. Put this on a 3-month graph. OWN, I like the move. From a semiconductor, love the earnings per share. And I'm actually going to keep this stupid little MACD thing on here. Patrick likes MACD, I don't. But I like the move. It's getting a little bit bullish on the technical move. Love the earnings per share. I would like volume to pick up a little bit more. But about 4 days ago, the 3-8 cross, we're stopping right now, right at that level of resistance. I think that this has got some upside as far as a semiconductor. MU, same thing, 3-8, nice open day. I don't like the earnings though, but I like the bullish MACD getting stronger. This could be a good sign. That's a second semiconductor. Here's my third semiconductor. Not nearly as bullish on this one as I am on the other ones, especially the MACD is not fitting in, but I do like the earnings per share. The volume is pretty decent. 3-8 haven't crossed yet. Not feeling that one just quite yet. In the last semiconductor, Taiwan semi, I'm watching the bullish move on MACD. The 3-8 are crossing today on good volume, good earnings per share. This has got some good upside to this level of $97. TSM's got some good move in it if it closes on the 3-8. All right. And SQQQ, I think that we're going to have some more upside. It is above the 3-8, about to cross, bouncing off support. It's bearish as far as the MACD. We'll see what happens for the rest of the week. These stocks are going to be my bearish stocks. I do like the earnings per share, but I think that with the news, with the housing slowing down, Remax. Go ahead.
There's a bear or bullish divergence with that one though. Be careful.
You talking about?
Look at the MACD steadily rising over the last 2.5 months. Why price has been falling.
I'm going with the news on this.
I know, but that's why I haven't touched real estate stocks, is because I've noticed that with a lot of them, they've been beaten up pretty bad. They may have a relief rally coming in, and I just haven't been able to touch them because of that.
All right, well, we're going to see going into next week. This is on my bearish side.
Yep.
This is on my bearish side. Remax on my bearish side. Goev, big move yesterday. Watch the closed bars, though. A little bit of give back. I think a lot of people are taking profit off of the news. But I do like the rising MACD, but I think a lot of people are taking profits off of the news. All right, let's go look at Patrick's picks from last week. He only had 4 picks. That's fine. Let's go take this back to 7-6. Do a quick test. Well, let's go see. CELH and DRIP both fell. Man, oil is getting to be a pain in the tuchus. Just make a move in a direction.
Right around there.
But LABU went up. Rivian went up. Overall, he made some money. 2 out of the 4 made money. The market was down. All right, and here's his picks for this week, and he'll go through those on his own.
Yeah. So first stock coming in from Micron, also Meta. Those 2 stocks were in that article we referenced earlier. Getting my mouse over here. Just mentioning how these are value stocks that are grossly undervalued right now. They've been beaten up pretty bad. And there's, the graphs are looking pretty good or pretty ripe for a reversal coming up, or at least some sort of a rally coming in. Really, we've seen it with a lot of different areas of the NASDAQ, which is why I also added in LABU once again here this week, just like I did last week. I still really like that one. It popped. It's now coming up to a resistance level right around 10. We'll take a look at that here in a few moments. But the chart, the reason why I liked the chart last week, I still like it for that fact this week. Boyle is a natural gas ETF. We were looking at it in the Jockey Club this morning, and I made mention that, this is one I'd wait closer to the end of the day to see if it can really gain some traction before jumping on board one way or the other. So for any of our Jockey Club members, I wanted to put this in here so that way we could take a look at it closer to the end of the day. Because, if you're going to be swing trading certain things, it's better to wait closer to the end of the day so you have a better picture of what's going on, more information to really absorb and help make your decision process off of. And then last but not least, GameStop. I did a video on it on Monday on our YouTube channel. So if you're on our YouTube, you can go watch that later. But basically, GameStop just announced a 4-for-1 split dividend. So the dividend aspect really just comes for more accounting purposes for them. So now one share is going to be a fourth of the price, and you're going to have 4 shares for every 1 share you actually own or you owned before. There's a lot of speculation. I'm not going to get into that. That's not really what we're doing here. So I'm going to talk about what is going on that's not speculation with it. One, there is that talked about split effect that we've seen with a lot of major tech companies over the years. This could have that same kind of impact on GameStop. Plus, they just announced their NFT marketplace. And now, while I get where a lot of people come from, I personally have never dabbled in NFTs before this. The reason why is because it's just JPEG art, just a little picture, and there's no real value to it. And so it didn't seem worth my time. So I'll be honest, I was kind of skeptical at first, when I first opened up the marketplace when they first released it and just saw a whole bunch of JPEGs. And I was like, oh man, it's just an OpenSea's copy 2.0. And I wasn't really looking forward to that. I didn't want to see that because there's a lot of negativity about that kind of NFT marketplace. And I don't want GameStop going down that road. GameStop's more of a gaming company, working in the gaming field. And so therefore, I wanted to see it be used for that. After I did a little bit more digging, I found a lot of great projects actually that look really, really interesting. One of them that I have written down here, Lone Navigator, by far my favorite collection so far. And the cool thing about it is when you look at it, you get an NFT, you buy the NFT, it has this little spaceship and all that. And, it's cool and all. But then when you read about the collection, that's where you really start to see, man, this is a lot different. This isn't just like OpenSea's. When you buy into the NFT and you have the NFT in your wallet or you're the owner of it, they have a game that's getting ready to be launched on the blockchain, and you'll be able to use that NFT in that game, and you'll have first access to it. So there's actual functionality behind some of these. Another one that, Glenn, I think you're going to like a lot, the LOV or the League of Veterans.
Hoorah.
It's an NFT collection that they started, and all the money that they raise from the sale of these NFTs are going back to veterans to help them get started to get into art if, it helps them with PTSD, those sorts of things. So, there's a good cause behind the sale of that NFT. It's not just about, oh, look, I have this little JPEG that I can try to resell to somebody else and rug pull them. It's about, an actual purpose behind that. And that's, what I wanted to see with the NFT marketplace is actual value being created with this NFT marketplace. Also, in the first 24 hours, they did over 2 million sales, and it was on a soft launch with no major partnership news, no major announcements. So, that's pretty impressive for a company doing a soft launch, especially with the current conditions of crypto markets, NFT markets. It's a bold strategy, but at the same time, if the market's getting close to a bottom, all of a sudden you have a opportunity to jump on board on a overly depressed market that has actual value, that could actually have reason for increasing in value, not just for, trying to be what is the fool's dilemma or whatever Bill Gates claimed it was. So yeah, and then the last one I'll talk about here, one of my other favorites I have my top 3. We're Lone Navigator. The other one is Soda, which they have a collection called Genesis currently. They found 200 different artists all across the world. They're based out of Europe, or Poland to be exact, and they had these artists design these or draw their art and do their art on skateboard decks. And so what they do, you buy the NFT and then you have access, or you have the rights to buy the actual skateboard deck with the artist's actual original artwork on it. And so you'll own that actual artwork so you can have the NFT going along with it. That's the kind of stuff I wanted to see be, put in real use and really, separate itself from any of the other NFT marketplaces out there. And that's exactly what they're doing. They're putting actual value behind these NFTs and linking them to either certain projects. So that way, when you buy the NFT, that's basically the way you're funding these smaller indie game producers who are trying to develop these games that you'll be able to use your NFTs for. Or they're actually getting some value out of it, such as the actual artwork. You're supporting a small artist and you get the NFT, plus you also get the actual artwork that you can have in person. So, once again, it's really a game changer from what we're seeing with any other marketplace out there. And it's even just during a soft launch. So once you get major partners in and start seeing these other projects coming in, there could be a lot of momentum behind this that is really exciting to watch. So definitely one to keep on your radar, to say the least. All right, so with that, let's go ahead, take a look at the graphs real quick. I know I've ranted and raved a little bit longer than I probably
did. Shut up
expected.
and watch this now. Dang it.
Huh?
Yeah, you just talked.
Dude, the there's a lot.
I know you're excited about
as much as I possibly can in a very short period of time, but it's
I know you're
excited
excited about it. I know.
All right, so MU, Glenn already looked at that. We'll skip over that one for now. GameStop found this support here right around 115, 116. Now heading back up. So here was the announcement off the news for the 4-for-1 split. Then you saw it moving sideways, consolidating around that point, and now starting to break out, going back to retesting that high, or that level of resistance at around, 148?
Yeah. Hey, does it not concern you that they're not making money and that they're losing more money?
Well, no.
Okay.
Because I understand the company's been trying to turn themselves around. You look at Tesla when they were trying to really get off the ground. They were spending money, a lot of money, to get their company off the ground. So yeah, the company's earnings weren't great. Look at Amazon. How long did Amazon have negative earnings for? How long have they, taken all their extra profits to put back into their company to develop AWS, to develop, his rocket, quote unquote rocket, whatever you want to call it, the inappropriate looking rocket that he flew into space on.
I'm just asking. That's all. I'm just
so
asking.
Yeah, I mean, it's they're trying to turn the company around. They have the money on hand, and they're charging only 2.5%. I think is the rate that they make off of every transaction. So they're going to be undercutting pretty much every marketplace out there. Facebook charged 30 to 40% of the rate. And also you look at games, you look at Steam, they take a 30% cut on all transactions on there. Everywhere out there, just like Google and all that, they take 30% cuts on everything. So, GME coming in with 2.5% is a lot lower, which gives you a lot more profit as, the producer or one of the, AAA studios or creator. Also, you're going to be able to make more profit from the resale of everything as well. So, I mean, it's similar to what they did with Chewy, where they carved out part of the market from Amazon, just in a different fashion, has its own uniqueness to it, but it's pretty spectacular to see it starting to come to light and seeing all the new things coming out with it as well.
Okay.
So yeah, I understand, having this marketplace isn't going to make earnings events or, rebound and turn around instantly overnight. This is something that you probably really won't even see the effects on the earnings performance until 2 quarters from now. So after August, the next quarter announcement, probably around September, November, that's when we'll probably see, the actual boost from this project that they've announced or they've released here.
Okay.
Let's go through. What else we got? Come on. Meta. I like Meta. I've been talking about this long-term bullish divergence here. MACD has been steadily picking up. Price has been steadily moving lower. It was on that list earlier from the 7 undervalued value plays that an analyst was looking at. And right now you see it's steadily declining. MACD, once again, steadily rising. Earnings obviously is declining as well. No surprise. We've seen earnings declining on most growth stocks as inflation and interest rates rise. But you are seeing a basing here. And if we can get a breakout of this resistance level, we could potentially see a new run starting to come in here. So I like it from the bullish divergence standpoint. LABU, we've talked about it last week. Same reason why we like it here. You have a lot of buying pressure coming in. We broke through that level of resistance. Let's see, where was it? We broke through that level of resistance. I believe it was around $6 to $8. I think it was like $8.50, somewhere around there.
That says $7.59.
Okay, so around $7.50, we broke out of that resistance level, moved higher, came back and even retested this resistance is now a support floor. And then now you're going up to this level of resistance here at around just shy of $10, roughly right around $10. If you didn't take advantage of it last week on the new uptrend starting to form, wait to see it, looking for a new entry, wait to see us break out of that $10 resistance before jumping on board with it. But once again, similar situation, you have a long steady decline here in price. The MACD has been steadily rising, indicating that bullish divergence there. And then last but not least, we have Boyle. Boyle is one that, once again, we looked at in the Jockey Club. The 3 is greater than the 8 as of today. The MACD did turn positive as of today, but I'm not really liking what we're seeing here at price. We have low volume first and foremost, and we're also now back below that level of resistance. I wanted to see it around 56, get broken, tried to break above that, but now pulling back. So, and maybe tomorrow, but right now for today, I don't think Boyle is the best time to enter into it.
Right.
All right, so that is my stocks as fast as I could get them in. Thoughts, comments, anything like that, Glenn?
No.
Awesome.
Well, my face. What did you say? My face. What did you say? What's wrong with my face? I'm gonna fight you today.
Let's get it.
I'm gonna fight Joey today on his birthday. All right. I got that old man straight. Thank you guys for being here today. Patrick, thank you for being here today. If you haven't already, hit the like button. We brought a lot of material for you today. We looked at some of your stocks. Again, today we'll put up another community post. I'll get an opportunity to put your stocks in there. We'll split them again. Patrick had 3, I had 3, and we'll do it again next week. But you got to be a subscriber to this. You got to be a subscriber to the channel in order to see that community page.
Yep.
Right? So with that, we're done. Renovation and development, someone like that. I'm so glad we had this time. I'm so glad we had this time. All right, but I thought we brought a lot to the table today. All right,
we had a lot to cover. It looked like at the beginning of the session that we weren't going to have too much to talk about, and it was going to be an easy session, but we ended up talking about a lot more than I thought we were going to be talking about today.
That's the beautiful thing about what we do. All right. So with that, I'm out of here. Patrick's going to shut us down for today. Go ahead, man.
Yep. So thank you everybody for tuning in here. Once again, my name is Patrick France, followed by
Glenn Tompkins.
And we will both be live if you want to see more of us. As always, tomorrow at 11 a.m. Eastern, we have the better looking of the two kicking us off with our mobile coaching session. And then we also have Trending Thursday at 2 p.m. tomorrow with the other guy next to me here. If you want to come back and have to deal with him talking a lot again. But once again, folks, thank you all for tuning in. Have a great rest of your trading day. Sounds like it's starting to rain, so if you guys are around the area, make sure to stay dry. And once again, come hang out with us tomorrow for our mobile coaching session and also Trending Thursdays. They're a great time. You get to talk to community members and, get your questions answered and really see what's hot and what's not. So if you've never attended one, make sure to come join us tomorrow there for those. So on that, thank you very much. Y'all have a great rest of your day. Toodles.
Later.